would it be safe to assume that the margin of safety would be higher in the larger names as opposed to the smaller names, simply because of economies of scale, better financing terms, so on and so forth? And therefore, should one be cautious in this rally? Is it a good idea to book part profits into some of the small caps which have had a really strong run in the recent past?
Of course, it's always tempting. It depends on, if you bought, mutual funds or individual stocks in terms of, where you want to take profits. But this is what I was saying, Niraj, and it's a kind of a bigger picture view. So bear with me a second.
Sure.
In that, we talked before previously about, when the downturn comes and whether it's recession and so forth. What we do know is that interest rates will have to fall globally. And of course, growth will come from emerging markets. Now, in that period where you're saying, okay, the global economy goes down, then obviously, exports, our growth will start to slow. But our domestic economy is still strong. And in the second half of the year, with all the government capex and private capex coming through, I think that will have a multiplier effect as we go forward into 2024. So whilst it's tempting to say, yes, take some money off the table in small and mid caps, I think we're just starting the kind of run for earnings domestically. So whilst it might be challenging in the very short term, I think going forward, that's where you're going to get the more money for in terms of returns overall for India. So yes, if there's some unintended consequences of higher rates, our markets could go down on the back of global markets falling. But previously, if you remember, I used to say, I'm not a buyer into this market. I'm not a buyer into the dips. Today, I would say that if markets were to correct, I would be a buyer into those dips. So it's a but more constructive on the markets going ahead.